Tax governance is a critical issue shaping the global economic landscape. And while the OECD-based Erosion and Profit Shifting Initiative is setting the stage for global tax reform, Africa's involvement has been surprisingly limited. In this video, we will explore the factors contributing to Africa's low participation in the BEPS initiatives, as well as the strategies to consider to better align with global tax reforms and safeguard their economic interests. Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of TaxMobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos. Africa's engagement in the OECD Inclusive Framework on BEPS has been limited, with only 23 out of 140 participating nations representing the continent. This disparity highlights the importance of understanding the costs and find ways to augment the involvement of African countries, thereby enhancing their capacity to actively contribute to and benefit from international tax standards and practices. Factors contributing to the low African participation. Practicality and transparency concerns are some of the factors limiting the participation of African countries in the BEPS initiative. The perceived complexity and practical challenges of aligning their local tax laws with the international standards set by OECD is a major hindrance. For many African countries, adapting to these complex rules is difficult due to limited resources and capacity, which makes it hard to fully adopt and implement these global tax measures. Also, the BEPS initiative requires countries to share information and be more open about their tax practices, which can be tough for some African nations struggling with institutional and operational challenges. This transparency requirement can be a significant hurdle, leading to hesitation or reluctance to fully engage with the initiative. Nigeria and some developing nations have expressed significant concerns about the OECD tax initiatives, particularly regarding transparency and the fairness of revenue distribution. There is a strong perception that wealthier nations may benefit more from these frameworks, which fuels skepticism among developing countries. This perceived lack of transparency raises doubt about the inclusivity and fairness of the decision-making process, leading to calls for more openness and equitable participation in shaping international tax policies. Nigeria's position highlights the need for a more inclusive approach, one that truly considers the unique challenges and priorities of developing economies. Impact on low-income countries. Low-income countries that depend heavily on corporate income tax are likely to face significant challenges with the OECD proposed global minimum tax rate and model rules. These tax reforms would dramatically change how multinational enterprises are taxed and how taxing rights are distributed among countries. As a result, these nations may see major shifts in their tax revenue, forcing them to rethink and adjust their tax policies and economic strategies to adapt to this new global landscape. These changes in international tax laws could threaten their ability to maintain tax revenues, tax multinational companies fairly, and keep their economies competitive for investments. However, they must carefully balance the need for economic growth with the realities of their development goals. Such complex tax requires careful planning to ensure they don't lose out in the global tax landscape while still attracting the investment needed to grow their economies. Strategic consideration for Nigeria. Nigeria faces critical decisions in responding to the OECD global minimum tax rate and the model rules. To navigate this complex landscape, Nigeria must focus on three key areas: regulatory reforms, international engagement, and investment promotion. Regulatory reforms. Nigeria should consider updating its tax laws, including transfer pricing regulations and tax treaties, to align with the new international tax standards set by the OECD. This alignment will protect Nigeria's tax base, enhance anti-avoidance measures, and ensure that domestic policies meet international expectations, keeping the country competitive and compliant. Bilateral and multilateral engagement. Nigeria can strengthen its position by actively participating in international tax discussions, particularly within the African region and through forums like the OECD Inclusive Framework. By collaborating with other nations, Nigeria can better protect its tax base and advocate for its national interest in global tax negotiations. Investment promotion. To maintain a healthy investment climate, Nigeria should work on attracting foreign investments despite the changes in global tax regulations. This can be achieved by improving infrastructure, ensuring regulatory transparency, and protecting investor rights. By showcasing a business-friendly environment, Nigeria can balance the need for foreign investment with the goal of preserving tax revenues. In summary, Africa's limited role in the OECD BEPS initiative points to significant challenges in global tax reform. The complexities of aligning local tax laws with international standards and the need for greater transparency are major hurdles for many African nations. For Nigeria and similar countries, adapting tax regulations, engaging effectively in international forums, and promoting investment are crucial steps. Low-income nations must carefully balance these changes to protect their tax revenues while remaining attractive to investors. Greater inclusivity and equity in international tax decisions are essential for ensuring that all countries can benefit from global tax reforms. Thank you for joining us on this enlightening journey. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.